Hey guys, welcome back. My name's Aaron. This is Czar Finance, episode 38, technical analysis on volume. Okay, so when it comes to volume, what does that mean? Volume basically means it's the amount of shares a person is buying throughout the day, month, or year, if you will, for that trade of a certain company. When you have a lot of people buying a lot of shares, the volume will increase, just like you're driving in a car, for example. When you press the gas pedal down, you're going to flood the engine with a lot more gasoline to give it more oomph and more drivability to go faster, right? When you slow down in the volume and lift off your foot off the pedal, it's going to slow down in volume, often causing the car to slow down or stop. Now, the same thing applies when it comes to stocks. With volume, you have these indicators here. This is the amount of volume that's happening throughout the day. As a lot of people are buying and selling, the volume goes up. A lot more people are buying, a lot more people are buying, a lot more people are buying, a lot more people. Oh, we're starting to lose interest in something. We're starting to lose interest. Okay, we're not buying as much of this product. We're not buying as much of this product. As we are losing interest, we are decelerating and losing volume of the stock itself. Sort of like if you have a balloon and you let out the air, you're kind of letting out the air of the stock. So it's starting to come down, starting to come down, starting to come down, starting to come down, and not as many trades are going on throughout that day. Not a lot of buying and selling of that stock. But keep in mind, when you start to have a sort of a downtrend like this, you're also considering the fact that volume can also act as a spring or a compression spring where something, as it's coming down, it's getting tighter and tighter and tighter, and eventually it's going to release itself with a lot of energy and cause a lot of volume and trades to happen, and be a trigger event for a reversal or what's called a divergent. When it comes to a divergent, just like in the movies, it's sort of doing the opposite. It's going to buck the trend. It's going to come down like this in a way, and then all of a sudden there's a huge spike in volume because there's been a lot of compression. It's been waiting, and not a lot of people now. They say, okay, the great new product's out. A lot of people want it. There's a lot of demand for it. Now a lot of people are flooding into the market, gonna buy a lot of volume of this product, and now what the volume will do will cause the stock price to change drastically. So oftentimes what happens as the stock market volume goes up, the price will go up for the stock symbol ahead of time. So it's a great indicator to look at volume before placing your bets because you can take a look, not your bets, but your bets. A great way to indicate what's going to happen in the future based on open market close. How do I say? When the market closes, you can see was there aftermarket trading going on, and is the volume high or low? If you can see if the market volume is high, there's a great demand that the next day that this is going to shoot up a lot higher the next day. If there's not a lot of volume and there's not a lot of interest, then maybe the volume is starting to go down, and not too many trades or a lot of people are selling, for example. So volume overall is basically a number of shares or contracts being bought or sold through a given period of time. The time period depends on what chart you're looking at, whether it's a daily chart, a weekly chart, a monthly chart, or a yearly chart, or whatever time frame you're looking at. This thing can flow. It ebbs and flows. It kind of often goes like this. It kind of rides like a roller coaster, up and down. And as this does this, you can start to see that there's certain types of trend lines that are happening that will, rely on each other. And if there's an uptrend, if there's two uptrends, if you will, you can bet that the market is going to be going in a certain direction on that stock, for example. If there's sort of a downtrend, for example, going this way, well, the market is going to be headed down, going this way with the stock market bouncing up and down like the ball I was telling you before. So volume, great way to indicate stock prices and movements, and I highly recommend looking at them and using them to your advantage of tools for predicting what you want to place when it comes to stock picking and stock buying. Watch them first and see and predict what they do first before placing an actual bet on a stock. Start with a small amount. Don't go anything too crazy. We're talking like, maybe do like 30, 40 bucks, maybe $50 or $100. No more than $500 at a time, just to get your feet wet and get the sense of predicting. My advice to you is if you're going to start working with technical analysis and look at volume and stock charts and stock patterns, is to start small and do some free trading online. Experiment, do paper trading. Maybe go to tradingview.com and then sort of just place markers on there, sort of say, well, I think tomorrow it's going to go up. I think the next day it's going to go down. I think it's going to go sideways, or it's going to go neutral, or whatever. Make a note on a piece of paper and pencil if you don't have any of those things. Find out what patterns and things that you visually see to see what will predict the next day or the week. And if you're right on a consistent basis, and you're doing this like 10 or 20 times in a row, or constantly, you've got a pretty good feel for it and start to visualize these things, then I would say start to enter the market and go small. Go small with $100. Maybe $200 or $300, and then as you gradually increase and you get your confidence and you start to learn more about this in technical analysis, that's when you start to do full trades, as far as doing $10,000 at a time, 100,000, 20,000, whatever it is, at bigger amounts, so you can predict. And actually, if you start to invest a lot of money, you could actually be one of those people who are fluctuating the market using the volume. If you're running into like $1 million trades, you might be that person who's really influencing that stock price by adding a lot of volume into that stock, inflating or deflating the stock. So something to consider. So again, thanks for watching. My name's Aaron. This is episode 38, technical analysis on volume. Next week's episode, I'm going to talk to you guys about candlesticks and how to read them. It's very easy to read them and understand where they come from and all that sort of stuff. And I want you to know how to read the candlestick charts. Okay, all the best. Take care. And remember, where your mind flows, money goes. Take care. Bye-bye.